Now available on Tata Sky channel number 526.
Hello and welcome to the Property News here on Magic Bricks, now India's first property channel. I'm Krishna Kumar. First up, let's take a look at the headlines that we're tracking. Cheaper home loans and affordable homes are coming your way. Magic Bricks now tells you how your loans will get cheaper and where you'll find that affordable home. The Reserve Bank of India cuts the repo rate by 0.25%, bringing interest rates to a 5-year low. Good news for all home loan borrowers. As your home loans get cheaper, homes in Mumbai are set to get more affordable. 181,700 affordable homes are set to come up in the city. Straight up the big story that we're tracking over here. RBI Governor Raghuram Rajan has cut the repo rate by 0.25%. This move brings benchmark interest rates to a 5-year low. Governor Rajan said marginal cost-based lending will help in rate transmission and borrowing is set to become significantly cheaper. Let's listen in then to some of Raghuram Rajan's key highlights from the Monetary Policy Review today.
Has the rate cut been enough? We think it is what is sensible given the uncertainties surrounding the economy right now. That because of the MCLR, we actually already have a rate cut of 25 basis points to 50 basis points before the policy. And as this winds its way through the MCLR over the next few months, you'll have more of a rate cut. So don't look at it as 25 basis points. Look at the composite of measures. They all add up. And borrowing rates are coming down significantly in this economy. The effects of the liquidity measures will also help transmission, because banks have continuously been saying it's because of liquidity tightness that we can't transmit. Now we've given them enough liquidity, they have the ability to transmit even more. So my hope is we will see significantly more transmission in the next few months, and we have to be careful therefore that we are doing what is appropriate given the state of the economy.
Now, the government says RBI's decision to cut interest rates is in line with expectations. However, the government says banks still need to do lots more in terms of the transmission of those rate cuts. Listen to what Minister of State for Finance Jayant Sinha and Economic Affairs Secretary Shaktikanta Das had to say.
In coordination with the RBI, we really have to amplify both the fiscal initiatives as well as the monetary initiatives that are now in the pipeline, and that really is what we are working on now, is to amplify the policy actions that we have undertaken. As we do so, we believe that we will provide the boost to the economy that it needs. We obviously have to wait and see what happens with the monsoon and with aggregate global demand.
As you are aware, government has already kept the fiscal deficit under control. 3.9% in 15-16 and 3.5% is the target for 16-17. Inflation is low. RBI has projected an inflation of about 5% for next year. Government has also reset the small savings rates. And so under these circumstances, the RBI's announcement of 25 basis points is therefore in line with the direction in which government would like the economy to move.
Now, it's not just the government that is cheering RBI's move. Bankers too are happy about the rate cut. HDFC's Keki Mistry says that while the 0.25% cut was in line with expectations, there is still further scope for rate cuts in the current financial year. Take a look.
I think it's a very good policy. The most important thing was not just cutting rates. I think the more important thing was to infuse liquidity in the system, because we have seen that in February and for a large part of March, liquidity in the system was very tight. And I think if the liquidity question can be addressed, then I think that will go a long way in bringing rates lower in the system. I still believe that there is scope for a 50 to 75 basis points cut in the course of the calendar year, of which we've seen 25. So I think there is scope at least for 25, maybe 50. But a lot depends on monsoons, and a lot depends on global events. Any reduction in funding cost, any reduction in the marginal cost of funding would immediately result in an improvement in margin, which we would pass on to customers by reducing our lending rates. So it's not that banks alone have the ability to reduce lending rates. Of costs come down, which they will, then obviously we will have a similar ability. So I don't think transmission will be that much of an issue, because when banks have moved to a marginal funding cost, and more importantly, government has reduced the small savings rates, the ability of banks to lower the deposit rates and therefore lower their overall cost of funding would be a lot higher. And if their marginal cost of funding comes down, then naturally the benefit will pass on to the customers.
So clearly there is cheer for home buyers as home loans are set to get cheaper, especially with banks now adopting the new marginal cost of funds lending rate. It's an added advantage for home buyers, considering banks will now be forced to slash their lending rates. How big of an impact is this going to be for home buyers like you and me? We have Amita Balachandra standing by with all those details. Amita, take it away. Tell us more.
Well, this of course is good news for home loan borrowers, as home loans are set to get cheaper. Of course, RBI has gone ahead and cut its repo rate by 0.25%. Now, the idea of course is that banks will be forced to slash their deposit rates, which in turn is going to force them to slash their lending rates. Now, we must also remember that starting the first week of April, banks have adopted the MCLR system, or marginal cost of lending rate system. Now, up until now, banks used to follow the base rate system. Of course, they couldn't lend to borrowers below that base rate. Now, of course, with this new formula, interest paid on deposits are now going to be linked on interest that they get for home loans, which means the process of transmitting that rate cut is going to become more transparent. Of course, we also know that small savings rates have come down. So all of this is going to force banks to slash the deposit rates, which means that we could expect cheaper home loans, which also means that we could expect lower EMIs, and that is a huge boon coming in for home buyers.
Huge vote coming in for home buyers. Thank you, Amita, for that. We also have a special guest to understand this better. Harsh Rungta, CEO of ApnaPaisa.com, joining us live here on Magic Bricks now. Harsh, thank you so much for taking time out to be with us. Tell us, first up, how is this rate cut going to impact home buyers?
I think the cut in the RBI's repo rate was widely expected, and I think this is one among the various steps. We have had, of course, the cut in small savings rate with the promise to reset them every quarter, and I think with this rate cut we will see a cut in deposit rates in this quarter from the banks, which in turn will translate into lower lending rates. So I think we are going to see a fall in both deposit rates, and then after a lag, a fall in lending rates as well.
Harsh, starting the 1st of April, banks have to compulsorily follow marginal cost of funds lending system. With RBI's new MCLR lending system kicking in, is there more scope for banks then to transmit rate cuts?
So the whole MCLR system is been designed for faster transmission, and I think with the RBI watching, that should happen. The only key is, would the faster transmission happen only for corporate clients, and will it not happen for retail clients? I think those are some of the things that remain to be seen in terms of how the MCLR system actually works out. It's not a very transparent system, and how it actually pans out, we will have to see over the next few quarters. I suspect that it may drop, in terms of transmission, it might be much faster for corporates or for non-retail buyers, non-retail borrowers, than it is for retail borrowers.
Harsh, all said and done, MCLR is something that will benefit the new borrowers. Old borrowers are yet to benefit from this. Should then existing borrowers shift to the MCLR system?
You are absolutely right. The existing borrowers who are on the base rate system, or if some of them are still on the old PLR system, they will anyways not get any benefit under the MCLR system. They can shift, but there can be a cost that the bank can charge. They are allowed to charge something for shifting to the MCLR system. So whether they should shift or not, I think I would wait and watch in terms of how the MCLR system pans out. But one thing that you should definitely do is definitely you must explore the option of shifting your loan completely to another lender, and at that time also check what your existing lender is willing to give you, and only then you decide to shift whether within the same lender into the new MCLR system or to a completely fresh lender, of course with the MCLR system.
Harsh, finally, some banks announced the MCLR system, but what we have seen is a maximum of 0.1%, which is barely nothing. Tell us, will we have to wait even longer?
I think only the banks can answer that question, but as I mentioned, the system itself is not hugely transparent. So, it's very difficult to predict exactly when. First of all, the rates have to get lower from here on before it starts affecting the announced MCLRs. So I think banks were waiting, a lot of banks were waiting for the credit policy to announce their MCLRs. Please remember, any loan written 1st April onwards has to be only be on the MCLR. So I think every bank will announce their MCLRs. And then for further reduction we will have to see how the interest rates behave, and as I said, I suspect that the manner in which the corporates will get the reduction will be much faster, because they have a far better bargaining position versus the retail borrowers who is not in a position to bargain with his lenders.
All right, Harsh, we'll let it go at that. Harsh Rungta, CEO of ApnaPaisa.com. Thank you so much for taking time out to be with us here on the Property News on Magic Bricks. Now, let's then also get in a developer's perspective on this. Joining us live on the phone line is Niranjan Hiranandani, Managing Director, Hiranandani Group. Niranjan, thank you so much for taking time out to be with us. Tell us, developers have been pushing for a rate cut for a long time now. How big of a boon is this for home buyers? And do you think banks will now be left with no choice but to slash lending rates?
I don't know about the choice, because I think the banks are far stronger than the individual home buyers. But one thing is certain, that today you must understand that the non-performing assets, or the NPA in the home loan segment, is the lowest in the country. It's less than 1%. Hence, what has happened is the banks are pretty enthusiastic to focus more on giving home loans, and hence will be competitive and more competitive. All the other segments like infrastructure, like steel, like other segments, huge NPAs have been accumulated by the banks. So I think the competition in the banks will force the banks to actually lower the interest rates, because they would like to take a greater share of the home loan market. So I don't think it's a question of being fair, just, etc. I think simply the competition in the banking segment itself will push the banks to actually move towards giving much more lower rates of interest, and this competition will help the consumer in the long run. I'm sure it's going to happen. NPAs have been lowest in the home loan segment, so the competition is going to become very fierce, and that is going to reduce the rates of interest, not just the lowering by the Reserve Bank.
All right, Niranjan, tell us, how will this impact the real estate industry? Do you think it will have any impact whatsoever on prices?
I don't see this issue on prices in the short run, but the answer is yes. In the long run, it will certainly make a lot of difference. But you have to understand that in the short run, the effects of the regulatory bill has to be seen, because with the impounding of 70% of the monies in respect of the monies paid by the purchaser, which is to be impounded into a separate account and used specifically only for that particular building, is going to reduce the liquidity into the market, and we don't know what is the increase in cost because of that. So I don't know what is the final effect on prices because of this home loan cut, but certainly the home buyers are definitely benefited from the long-term loan that they are going to purchase. Big benefit coming to the consumer, and especially over a period of time, I think they are going to be very happy.
Home buyers are going to be happy is the word coming in from Niranjan Hiranandani. Thank you so much for taking time out to be with us here on the Property News on Magic Bricks Now. Moving on, but sticking with the home buyer, 81,700 affordable homes are set to come up in Maximum City, Mumbai. Where will these homes then be located and how soon will they be built? My colleagues Disha Shah and Ruchi Deshpande are standing by with some exclusive details. Let's take it across to Disha first. Disha, MHADA and BMC will join hands to build 1.5 lakh affordable homes in Mumbai. How will both the BMC and MHADA bring about a larger supply of affordable homes?
That's right, 1.5 lakh affordable homes will be built for you and me in the city of Mumbai. And for this, Maharashtra's housing body, MHADA, and Mumbai civic body will work together, will join hands to ensure that the supply of homes come into the market. In fact, this was the proposal by a state government, where the government is planning to hand over close to 48 MHADA plots to BMC for maintenance purposes. Under this proposal, BMC will help MHADA to remove encroachments, and most of these 48 colonies are located in areas like Kandivali, Dindoshi, Vikhroli and Dahisar. So once the encroachments are removed by BMC, MHADA will build 1.5 lakh affordable homes in these areas like I mentioned before. What's more, to safeguard these colonies from encroachers, the housing body will construct a compound wall so that no one can illegally occupy the open spaces and colonies going forward. Let's not forget that MHADA has already spent close to 18 crore rupees to protect and maintain MHADA properties, and till date 77 plots have already been safeguarded from encroachers. Of course, all this is just a proposal. This won't happen overnight, and before that, both the parties will sit together and discuss on the timelines next week.
All right, Disha, thank you for that. Let's take it across to Ruchi. Then, Ruchi, over 1 crore square feet of residential supply could hit central and south Mumbai over the next 4 years as the Maharashtra government and MHADA are fast-tracking redevelopment of BDD Chawls. Tell us, where will these homes come up and how soon will they be ready?
About 31,700 affordable homes in some of Mumbai's prime locations over the next 4 years is what Maharashtra's housing developmental body, or MHADA, is working towards. Now remember, we told you nearly 2 weeks ago at Magic Bricks now that this BDD Chawl redevelopment in some of Mumbai's prime locations will generate about 2 crore or 20 million square feet of super built up area. Now we've done the number crunching and gotten you the facts for exactly how much residential supply will be created. Now out of this 2 crore or 20 million square feet, MHADA will redevelop about 41 lakh odd square feet, which also translates into 207 chawls to be developed overall. Now, if you remove this from the 20 million square feet, MHADA will sell about 1 crore 60 lakh square feet of space, which also translates roughly into about 31,700 units or homes overall. Now, when we last spoke to the MHADA CEO, he exclusively told Magic Bricks now that they are just waiting the cabinet's nod of approval when it comes to the BDD Chawl redevelopment project, and the work should commence in another 4 to 5 months, and they will also appoint an architect for the project in the next 2 months. Just to give you a bit more detail about the BDD Chawls, there are about 207 chawls spread across 93 acres in 4 of Mumbai's prime locations. The locations are Worli, Sevri, Naigaon as well as Lower Parel.
All right, Ruchi Deshpande and Disha Shah telling us a lot of good news about tons and tons of homes that are set to come up in Maximum City. Certainly, that supply will be easily usurped by the demand in the city of Mumbai. Now expect cleaner cities in the times to come in a move to solve the garbage crisis that the country is facing. The centre has released new solid waste management rules that will be needed to be followed across the country. And my colleague Aishwarya Paliwal sent us his report earlier today on the highlights of these new rules. Take a look.
Now, these new sets of rules regarding solid waste management have been put in place to rein in the havoc that excessive garbage has been creating for our country. One of the key pointers in these rules is segregation. Now, segregation needs to be done in all the new townships and all the housing societies that will be built henceforth. What this essentially means is that all the housing societies henceforth will need to have an inbuilt segregation plant. By segregation, what these new rules mean is that biodegradable garbage needs to be segregated from the one that is extremely hazardous for health. Now, once this segregation is done at the source level, there will be timely collection of the remaining garbage. Another thing that has been done is that there has been a charge and a fine being put in place for individuals as well as for societies who either burn garbage or who litter around. Once they are caught doing this, they will be charged a penalty. Another thing that has been done is that hotels and restaurants have been brought under these rules. From now on, they'll have to take care of all the food waste that comes out from their premises. And another interesting thing is that these rules are no longer restricted only to the municipal area in a city. All these rules are applicable to places like your airports, your railway tracks, areas in and around the sea in a place like Bombay. Another thing that has been done is that segregation needs to be done at the state level between people who deal with waste and people who pick up waste. So say for example your kabadi walas and your rack pickers. Now these will be brought together and integration would be done of both these teams at the state level. Now all these new rules are certainly put in place so that the kind of prices that we have seen in the past few months in places like Delhi, Bangalore, in places like Bombay should not happen again. Also the centre has made it very clear that from now on they will take segregation and they will take garbage as a very serious problem going forward.
Alright, on that note, let's take a quick look at what else is making news in the world of the property market.
Private equity firm Blackstone is in talks to acquire 2 commercial office towers in central Delhi. These towers belong to Pashwanath Developers and private equity fund Redford Capital, and the deal is expected to cost nearly 550 crore rupees. The 2 towers have around 3 lakh square feet of space. The Telangana government is eyeing $7.5 billion worth of production of electronics by 2020. In order to achieve this target, the Telangana government proposes to invest heavily on IT parks and infrastructure for the information and communications technology companies in the cities and rural areas. This proposal will include 2 large electronics manufacturing clusters on the Hyderabad outskirts. Telangana on Monday had unveiled its information technology policy with various incentives pertaining to land and power, as well as reimbursement of stamp duty and registration fee. Solar power plants have been made mandatory for housing societies, industries and other specified categories of buildings by the Haryana government. The government aims to achieve higher trajectory for solar power generation as well as promote green energy with this move. Nearly 40 investors have signed a memorandum of understanding with the government worth over 98,000 crore rupees. There's relief coming in for Bengalurians. The Association of Petrol Tanker Cleaners and Drivers in Bengaluru have called off their strike. The strike was held against the poor condition of roads as well as lack of access to basic facilities such as restrooms and drinking water. The strike began on Monday. The New Delhi Municipal Council has collected a record 3,408 crore rupees in revenue for the financial year 2015 to 2016. The NDMC has also posted the highest collection in property tax in the last 5 years. The municipal corporation collected nearly 444 crore rupees in property tax.
Alright then, on that note, a quick programming reminder for all our viewers. India's water crisis has worsened this year, and as usual, authorities responsible are busy passing the buck. We at Magic Bricks Now have begun a nationwide campaign to make the authorities accountable. Join our campaign for the fight for water. You can call us, write to us or tweet out on our hashtag #WaterWars. Send us pictures, even selfies, and we will make sure that your voice is heard. On that note, we've completely run out of time here on this edition of the Property News. Don't go anywhere. Stay with Magic Bricks Now for more news and updates. But this is Krishna Kumar signing off.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at Magic Bricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.